Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
Welcome everyone for dialing in. Hi, Chris. Nice to see you. Nice to have you join from Dublin. For those of you who've participated in the past, it's an engaging experience for today, and we're super excited to have you all join for this occasion. Goal of these workshops that we set up is really that we want to give you the chance to gather unique insights and new perspectives and really discuss challenges around consumer behavior. So we're super excited to co-host these sessions together with ReMark, who will be sharing more about their study in that regard. It's also an opportunity for you to learn and engage with other corporate partners that during the breakout session to learn a little bit more about how they encounter these challenges and just exchange on best practices, and hopefully that you can leave the workshop with some actionable insights that you can take back to your leadership and management. And ultimately, I really want you to have fun during this whole engagement. And so for housekeeping, we want you to be an explorer. So discover and share whatever you want, whatever you find out during the startup pitch session, during the ReMark's presentation, and also build on other people's ideas when we are in the breakout. Assume the best from each other, so we're all well-intentioned and smart and want to get the best out of this workshop. So that being said, we also hope that you're present. So as soon as we go into the breakout session, we ask you to turn on your camera and but be muted during the rest of the session, just to be respectful for everyone who's presenting during the sessions. But yes, with that, we'll go into a little bit of more interactive set up. Before, let me quickly run you through the agenda. We are about to wrap up the welcome and opening remarks. Then we will have Allison present some insights around why did we even choose financial literacy for this workshop. We then are joined by 5 startups: Icon, New Retirement, Status Money, Embodied Labs, and Upside. So we're super excited for them. And you will also get the chance to meet them in the breakouts. And then we go into the breakout sessions and really let you deep dive on the topic you've chosen when you registered for the event, and have a deepened conversation around it. And then we'll kind of wrap up the sessions by going back into the main session and have you share what you learned in the breakouts. And then we'll have some closing remarks. So now it's time to make it really fun. So if you all have your phone ready, you can start scanning that QR code. Gina, my wonderful colleague in the back, will also be sharing it in the chat in case you have trouble using this QR code. So, and I'll be taking over the screen. Can you all see it? I'll see once you're online, see the numbers adding up. So we're at 13 people. Don't be shy. Wonderful. Great, I'll wait a few more minutes until everyone's joined. Okay, great. Otherwise, you can still use the little feature in the chat, and just access it online. But we'll start off with just trying out a little quiz question to see if everyone knows how to work with AHA slides. So here is the riddle of today. I have seas without water, coasts without sand, towns without people, and mountains without land. What am I? A map? Possibly. Are there any other ideas? Other people are also at Google Maps. Okay. Metaverse, not a map. Okay, great. Yeah. Like the more people add the same question, it will also make the word bigger, but I appreciate you all participating and raising hands, so that's fun. I'll go to the next slide. See, some people are still adding things, idea. Okay, perfect. And that's by introducing Allison, because she will be presenting the first part of this next section. So Allison, if you just quickly want to unmute yourself to shortly present yourself before we go into another engaging experience.
Yeah, absolutely. Good morning, everyone. Hi, I'm Allison Brogley. I am head of North America for ReMark, so responsible for the US and Canada. And for those of you not familiar, ReMark is a subsidiary of SCORE, and we are a marketing consulting company that uses technology to enhance the consumer experience. And I'm excited to be sharing the results of our first ever global consumer study on insurance literacy. During today's session, I'm going to be presenting data on not only consumers' perceived literacy, but also results from a brief assessment that they were given. So to kick things off, to make it a little bit interactive again in the beginning, I'm going to hand it back to Desiree, and we're going to provide you an opportunity to put your own insurance literacy to the test. And don't forget to remember your final score, as we'll be discussing this assessment later on the global scale. So you might want to see how you compare to other people in the world. Back to you, Desiree.
Thank you, Allison. Yeah, let's kick it off. Let's see how that goes. Are you all ready for the short quiz? I hope so. Okay, we're waiting for you to join, so you all get a nice name. And don't be shy, there's nothing that can go wrong here. So we're starting the quiz now. In case you still want to join, I see a few more people are now joining us, so that's really cool. I'll wait maybe another minute. Remember, the link is also in the chat in case you just joined the workshop. Okay, let's start it. Thank you all. Start the quiz. Oh, where's the first? Here we go. Which of the following people do you think would need insurance the most? And you get 5 options and 30 seconds to answer. A single working parent with 2 children, a single college graduate with dependents starting their first job, a wealthy couple without dependents and with significant savings, or an elderly retired person with a spouse who is also retired. You got 10 seconds left. Three, two, one. Perfect. So we got 28 for the right one, and the other ones we'll learn more during the presentation from Allison. So off we go with the next question. Can an individual get life insurance if they have had COVID? Yes or no? 30 seconds is probably a little bit much, but in case you answer it very fast, we can already move over. So everyone who's online, please click yes or no. So 3, 2, 1. Perfect, everyone got it right. Glad to hear that. So here we go with the third question. For an average 40-year-old, the risk of dying in the course of the year is, so what is it? 1 to 2 people per 100, 1 to 2 people per 1,000, or 1 to 2 people per 10,000? Yeah. E34, wow. So everyone's participating. Thank you so much. See some surprises. So I think some people already submitted their answers. Yeah, and it's 1 to 2 people per 1,000. It's kind of shocking to me. Great. Fourth question, do you need to be related to someone to be a beneficiary on her or his insurance policy? Yes or no? You get 20 seconds. So Google may also still be of availability in case you want to shortly be reassured that you're right. 3, 2, 1. So Google's out of option now. Great. And then question number 5. Which of the following factors can affect the price of your life insurance? We have a few options for you. Is it whether you're married or not, your medical history, your age, the number of children, or whether you're a smoker or not? What is it? And there are multiple answers possible. For all the experts on the line, that's probably a very easy one. Got 5 seconds left. And here are the answers. So it's medical history, age, and smoking status. And here we see, wow, we got a lot of people that got everything right. 6 winners, congratulations. And with that, I will pass it over to Allison to take over the screen from here and run you through more details on what financial literacy is all about and what the statistics say on how people do in terms of their financial literacy. Thank you, Allison.
Thanks, Desiree, and thanks everyone for joining me today. I'm gonna start sharing my screen. Okay, so before we get started today and hearing about some of the results of our insights from this study, I'm going to give you a little bit of background of what our study is and where these insights came from. So what is the Global Consumer Study, or GCS, as we like to refer to it as ReMark? Our GCS is the largest global study on life insurance and offers the freshest insights and analysis on attitudes to life insurance. And the purpose of it is really just to see what is going on in the world these days in terms of not only life insurance, but also just in the world as a whole, since we know what's going on in the world can impact what people's thoughts are on different impacts of life insurance. So the purpose from year to year is really just to follow the consumer trends that are going on and just to understand where people are in their understanding of the insurance industry. And this is actually our 8th edition that came out in the fall of last year. We have just started working on the 9th edition, which will be available in September of this year. And what is the same and different from year to year? So what's the same is that we have themes each year, and those themes are relevant to what is going on every year. So then what's different is what the themes are, since what is going on in the world each year is different. Some years there are some overlap. We've seen some different topics that have stayed prevalent, and so we keep asking about those in our survey. But otherwise, we are continuing to update with what we see is happening, what is starting to emerge in the industry, or again, just in the world as a whole. And the themes for this year's study were financial literacy, attitudes toward insurance, health and wellness, and then the use of data and technology. So just a snapshot of what this year's study looked like. We had 22 markets that were surveyed during this study. And we had 4 additional ones this year. So we're continuing to update how many different markets that we are looking at. There were a little over 12,800 respondents part of the survey, and you can see the breakup between each market here. And we work with a third-party vendor to help not just validate the study and the results, but also to make sure that we have representation of that country as a whole. So we're looking at the different generations, different genders, just different demographics. What does need to be in part of this, though, is that the people need to be decision makers in their household for financial services. So they are interested in insurance, and that is something that we do make sure that these are relevant people that are answering the questions. What we're going to be focused on in this workshop is the financial literacy part, and we're going to be focused exclusively during this study on this workshop on the US. But we have information for all of our other markets. So after this workshop, we will provide ways for you to go back and you can take a look at the other markets and just our other insights that we have developed from this study. So as I mentioned earlier, insights from our study are based on both self-reported and self-assessed knowledge. So we're going to walk through the results for each of them and compare them. And then to better understand how literacy is influencing buyer behavior, we're also going to explore their confidence in making purchase decisions. So this first one, we're going to start out looking at the consumers kind of from a higher, broader level. And again, this first few questions that we're going to be speaking about are all people's self-reported. So this isn't being tested or anything. This is what they are saying is true for them. So we're going to start again at a broader level and just get a benchmark for where people's literacy is with financial insurance and financials and insurance in general. So we're going to be asking about just knowledge in terms of investments, pension, banking, savings, and insurance. So here it is again, this is for just the US. And you can see here that, and it's ranked based on the people that where the highest up ones are the ones where people are most comfortable and they have the most knowledge on. So as you can see here, the ones that are the most knowledgeable are really some of the products that maybe more people own or a little bit simpler to understand. So we see at the top, a lot more people have knowledge on savings and banking, whereas see at the bottom, investments, pensions, products that maybe not as many people own, or products that are a little bit more complex to understand, kind of understandably, there's not as much knowledge surrounding them. But we see in the middle here is where we see the life and health knowledge as well as the property and casualty knowledge. And I think something, it's important to note here from the life and health that it's good to see that 96% of people do have some type of knowledge of the life and health insurance, and almost 60% do state that they are pretty knowledgeable in these areas. And again, we're just going to say this is from a self-reported area, but at least people do feel like they have some knowledge on these subjects. So now we're going to get a little bit more specific, and we're going to look closer at just life and health products specifically. So we're again going to ask here, what is the knowledge specifically of these types of products? So we see here, there is generally a correlation when we ask people, how good is your understanding of the following products, that people's understanding of products are generally tied to ones that they probably potentially own. We see a lot higher knowledge of private health insurance and also accidental death and disability, whereas some of the other ones maybe that are a little bit more complex or confusing, such as whole life, we see people aren't quite as comfortable and knowledgeable on. Overall, though, we do see a knowledge gap that exists, with over a fifth of respondents saying that they have no knowledge of any specific health and life products. So this shot is actually taking it from a little bit more of a global perspective, and I think some interesting facts came from here. First of all, we broke the different markets up by growth and established markets. So let's first focus on the US in terms of how they're responding of their product knowledge in terms of the rest of other established markets. So compared to these other established markets, US consumers are 20% more likely to report very good or good understanding of life and health products than other people in the other markets in these established markets. So just kind of remember that point. And the other point of view that's good taken from this is that you can see here the blue lines are from the growth markets. The green is from the global average, and then that yellow is the established market. So we are seeing here that growth markets are saying that they have more knowledge on life and health insurance than the established markets are. So again, when we look a bit later at the actual results, it will be interesting to see are people's, what they perceive as knowledge actually true. Now we're going to look at the age and how that impacts literacy. What's great about our GCS is that it breaks things down not only by the different countries, but also by different generations, which is really beneficial for many of these subjects, since a lot of them are current trends. And because of that, you are seeing very differing responses and thoughts and feelings when you're looking at these different generations. So here we are looking at a question of how much do you think you know about life and health insurance? Again, this is in the US and self-reported. I was surprised when I saw these results. I would have assumed that the older generations, people in the Gen X and the boomers, would have more confidence or more knowledge in these areas since they have most likely been dealing with these longer and potentially also own more of these. But we actually see the opposite being true here, where we're seeing millennials and Generation Z saying that they have much more knowledge than the older generations. So this will be interesting to see when we look at the results later, or the actual results later. Is that actually true? And where is the difference between people's assumed level of knowledge versus their actual knowledge? And then this just kind of enhances that question a little bit more, focusing on the confidence here. And there is, so we see before that a lot of people do have knowledge, or they're saying they have knowledge on the products, but about 55% say that they have a good or very good understanding of life and health products. But then we do see a slight drop here when we look at, if we look at the average of those that are very confident when applying for life and health coverage. So that is something that we maybe want to work on here as an industry, is that bridging that gap between people feeling like they have the knowledge, but they're not quite as confident when they're making a purchase decision. We also see down here about 30% are saying that they are confused or slightly confused or very confused about purchasing these products. So again, helping ways to try to bridge that gap and make people not quite as confused during the purchasing product. What we will see here, though, is still that trend of the younger generation and specifically millennials saying that they have confidence when they are purchasing. Definitely seeing here still a generational difference when it comes to confidence or perceived confidence as well. So now that we have an understanding of the perceived insurance literacy, we are going to review the results from the assessment. So this is the first time we have done this assessment, and respondents were given the exact same assessment that you were provided in the beginning of this presentation, and they were scored out of 10. So the scores that you're going to be seeing are that number out of 10. And if you scored 500, that's going to be equivalent to a 10 on the scoring system. So we see here the global average, again, out of 10 is 6.59. So respondents typically answered 3 out of 5 questions correctly. What we take from this is overall consumers have a reasonable understanding of who needs insurance, the benefits of it, but definitely still a slight gap here in looking for some areas of improvement. What though is kind of two kind of glaring things that I felt when we see these results. If we go think back about that earlier slide that had the different color, the blue and the yellow green lines in there, we can kind of see when we see the difference of perceived knowledge versus actual knowledge. So two things that stood out from that information versus this is that, first of all, if we focus on the US, so the US was 20% overall, having people saying that they were confident or knowledgeable about their life insurance knowledge versus those in other established markets. But we see here when we look at the US, they're actually way below some of the highest scoring ones in the established markets, looking at Canada, Sweden, the UK. And even amongst all these established, they're actually on the lower end of all these different countries in terms of their actual knowledge. Another thing that kind of was perceived here was the difference that we saw of the confidence between the growth and the established markets. Then the global average is 6.59. The established markets overall rating was a 6.86, and the growth markets were at 6. So again, we see here that there is also a disconnect between a lot of people in the growth markets thinking that they have a lot of knowledge, but there is still a gap in what they actually know versus what they are perceiving their knowledge level to be at. Now we get back into that generation question and looking at, did age influence their test performance? So this more is aligned with what I would have expected in terms of where the generations fall. Looking back at the US being at a 6.72 out of 10, that number being as high as it is definitely being driven up by the older generations, with the Gen Z and millennials definitely scoring lower here. So what we see here is that the older generations are having maybe lack of confidence or thinking they don't know as much, but when their knowledge is actually put to the test, they actually are fairly knowledgeable about life and health. Whereas the reverse is true for the younger generations, where they're pretty confident about their knowledge, but are lacking some of that actual knowledge. It's also interesting when we compare this against other markets, whereas in the US, those younger generations are actually below their counterparts in these other markets in terms of their average, whereas the older generations are actually in the US are actually above the generations in other markets. So our study has demonstrated a knowledge gap, especially among young Americans. However, it is important to look at, are people looking for education? Because if they're not looking for education, and even though we think they might need some, that's showing from our results, it's kind of hard sometimes to push it out there if people aren't receptive towards it. But what we have seen here, good news for the US, that on average, 61% of people are looking for education here. And really even more encouraging is that about 74% of the Gen Z and millennials are looking for additional education. And it's just interesting, I think, looking at this, especially the Gen Z and the millennials, we see them overly confident about their life and health knowledge and comfortable buying online. There are these products. We see, though, their average actual score of knowledge being lower, but then we also see the fact that they are looking for education here. So just finding ways and looking for ways that are going to bridge kind of all those different levels where the Gen Zs are at to overall get them educated and make them buying the correct products that are right for them. So as we kind of summarize this generational factor, because I think there's just a lot of insights that came from this, we learned that confidence isn't always aligned with actual knowledge. So we're seeing here, older generations are much more likely to underreport their knowledge and express less confidence when purchasing insurance. However, their actual true knowledge is much higher. And younger generations, though, are the opposite in that they are more likely to overreport their knowledge and express greater confidence when applying, but score lower in their actual knowledge. And so a question might be, when you're hearing all of this, why is this happening? And what other factors may be coming into play that are just really showing these very distinct results here? And one area that can be really, we like to focus on, that we're seeing just coming up in a lot of our trends in our global consumer study, is things that are related to digital. And it's possible that older generations, while they do have that better understanding of products, that their confidence and just in perceived knowledge of these products might be impacted because they aren't as comfortable purchasing things digitally. Whereas younger generations are just more comfortable in general purchasing all different other products digitally. And so that confidence and perceived knowledge is coming into their perceived knowledge of life and health, even though they actually don't have it at this point. So actually how we're going to continue, we've been looking at this generation information in many different ways, and it's something we're actually going to continue to explore in greater detail in our next plug and play event. We're going to be doing one on elder tech, which will be in April. And again, we'll continue to look at how does digital play into the different generations. Our key takeaways from today overall are that overall Americans have a satisfactory level of insurance literacy. There definitely is some room for improvement here, but confidence levels for them are also pretty high. We're seeing that young American generations are trending behind their peers globally in terms of actual knowledge, but we see that Americans are open to being better educated about life and health insurance. So a key idea to just take away to think about and hopefully explore in our breakout groups today are what can our industry do to better educate consumers and bridge some of these gaps that we are seeing here between perceived knowledge and actual true knowledge. If you liked or more interested in wanting to hear more about what you have heard today, we will be sending a follow-up to get you a little bit more into our results. You can focus on a little bit more of the markets, like I said earlier, if you want to take a look at that. We also have a lot of other trends, and you can look at the report as a whole. But what we also have that's a lot of people like very easy to navigate is we have a dashboard where you can look at the information by market, by question, and also by generation. So we want to we'll give this resource out there for you if this is something that you would like to continue to explore. And at this point, I'm going to pass it back over to Desiree.
Thank you, Allison. Thanks so much. I really like those insights always. So we're going to straight move over to the startup pitches. And I know Matt from Renew Retirement will be the first one who will be sharing some insights on like how they address the financial literacy question and challenge. Matt, are you still on the line with us?
I am on the line and I'm sharing my screen right now.
Sounds great. Thank you, Matt.
Can you see that?
Yes, we can see it. There we go.
Super.
Stage is all yours. Thanks, Matt, for joining us.
Thank you. I'm going to be moving fast because I've been told I have 4 minutes to do this. So thanks for the opportunity to present. So New Retirement has a mission to make financial planning available to everyone. So you can imagine how passionate we are about the topic today. We've so far have 170,000 consumer users using the product. The company started in 2015. And with that experience, we've been able to understand very strongly how to engage end users, how to help them boost their financial IQ and create financial wellness for them. Last year, we rolled out an enterprise version of our platform so that we can address the needs of insurers and the financial services sector. And already we've had some good early success, which I'll talk about later. But the platform itself is available to the enterprises as a white label, customized, branded version, or through the backend API to access the financial planning engine itself to build functionality into your own products and services, or to build completely new products with the backend. We also offer it as optimizers and calculators, so you can plug things in as widgets into a variety of websites and portals. New Retirement also offers rich educational content with hundreds of articles, podcasts, and more recently, just in January, we released a bunch of online classes. So a little bit about the platform and what it looks like for a user. Users can input their assets, income, debts, expenses into the planning tool, and they immediately see the impact that that's having on their plan, so they can see what else they need to do. You can see here the plan completeness is 47%, so I still have some work to do, but the digital coach is telling me, hey, you could save or make $760,000 more over your lifetime if you rearrange your Social Security plan. So you can click here and the Optimizer Explorer will take you through the process, how to do that. You can see your chance of success, your income score, and you can click on any years during your plan. It'll give you a little bit of information about what your savings are for that year. So now that you've got a chance to see that, you can then go in and input all of your assets, update these, and as you're doing it, you can see the immediate impact on your lifetime projected income and your taxes. You can input assets from all different types of accounts. So this is a holistic planning solution. So that means all of your pre-tax, after-tax programs, retirement plans, annuities, et cetera, et cetera. Everything can go in here to create a full plan. Now that I understand what my income looks like, maybe I want to run some what if scenarios. So for example, what if I stopped working in 3 years? Or what happens if I live 5 years longer than I'm projecting right now? How does that look? And you can see right here, it's telling you that, you know, in this case, you would be okay if you stopped working 3 years later or earlier. So you can model things like home and real estate. You could say, hey, what if I want to relocate to Florida, and immediately see the impact of how that would affect your income and your taxes. Now, the question that a lot of people have is, how do I draw that money out? Now that I see, looks like I have enough income, what's the most tax efficient way to draw that out? So we provide you with a drawdown strategy here, where you can see all of the accounts where you would take money out each year. This is highlighting year 2048, and you and your spouse are withdrawing from these accounts, and then you can see the expenses that are getting covered with that. So you can see now that you've got expenses coming out of these buckets, but notice that there's no income tax that's needed to be paid in these years, because you've got a very tax efficient plan that's automatically being shown to you. We also have, excuse me, we have an area for estate planning where you can go in and input, have you completed these things, get more information about what you need to do. So I can say, well, I need some information about this. In every area, we have this thing called resources, which takes you to educational content. So if I go here, I can see, okay, what are the documents I need to deal with? I can get information on them and educational content right next to that. And I might say, well, I think I need some really live help. So I want to go onto the coaching area and schedule a meeting with somebody. Press schedule a meeting, and I get to the calendar, select the date, and now I'm online with a live coach or advisor from your insurance company. And this is how the digital planning tool can drive people back to your products and services, and would allow you to attract a new generation of investors that are more tech savvy, but still are going to need help to get higher client engagement in their financial planning, and then to automate the recommendations to the different things that they need to do, including how your services can help them to increase your upsell and cross-sell for them.
Thank you,
I still
Matt.
have one. I think am I up to time?
Yes, so unfortunately you're up in time.
Okay,
but thank
I'll
you so
stop
much,
there.
Matt. Yes, I think it was a nice last sentence, and everyone gets a chance to now click yes and connect with them with Matt afterwards. He will also be joining us in group number 1 for the breakouts, for everyone who wants to chat with Matt and learn more about this last slide he didn't get the chance to present. Sorry, Matt.
No problem. Thanks, Desiree.
Thank you. So we got up next, we got the next startup, Icon. So Icon, are you ready to present?
I am. Just give me 1 second right here. Okay. And then, all right. How do I look? Good?
It looks good. Thank you.
All right. Sounds good. So looking forward. My name is RJ Carver. Looking forward to introducing you all to Icon. So I'd like to actually just kind of start with a little bit of history here. So back in 1978, an obscure little section of the tax code led to the creation of the 401k industry. And so that's an industry that's worth over $9 trillion today. And so while it was a really innovative concept at the time, that plan really hasn't changed since that date. So it hasn't really evolved to meet the needs of the modern workforce. So as a result, we're seeing fewer and fewer employers offer these plans. It's actually less than half, which means over 75 million working Americans don't have a retirement plan. So why is this? There's a few things that are inherent to a 401k plan that make it difficult for a certain demographic of employers to offer these. First thing, they cost a lot. So they're very complex to set up. And because of this, it's often difficult to map out just how much they're going to cost you on a yearly basis. There's lots of hidden costs. Second thing, 401k plans generally entail a pretty extensive RFP process. Long story short, they can take upwards of 10 months to actually get your plan up and running. Also, because of this complexity, it comes with significant legal risk. So when you set up or when you sponsor a 401k plan, you're required to act as a fiduciary on behalf of all of the participants. And so what that means in practical terms is if you misstep in the management of your plan in the eyes of your employees in any way, they can sue you, and they will. This is happening more and more often. And the final thing is there's actually qualification requirements. So to participate in a 401k, you need to be a tenured W-2 worker. You have a transient workforce, you have some contractors. It's too bad they can't actually benefit from this. So what have we done to address it? We've actually built the first completely digital portable retirement plan. So what it is under the hood is it's actually a payroll deduct IRA offered on a completely digital platform. What we've done is we built this plan in a way that kind of addresses directly a lot of those issues that I just ran through. So first thing, it's significantly cheaper. It's very transparent pricing. So for the employer, it can be as little as $20 a month based on how many employees they have. And for the individual, they're only going to pay $4 per month when they decide to contribute. Second thing is it's a lot quicker to set up. So I'm going to show a little video at the end of this. Hopefully I have enough time that I'll show you, but it's long story short, we can get you up and running in days versus weeks. It's also completely portable. So with just a few clicks, again, in the back end of our platform, you can change to an individual Icon account, and you can actually add it to a new employer if they're interested in offering Icon. So again, you can take it with you no matter where you go. And then market adoption. So there's actually a few different ways that we've managed to successfully get this to market. So first off, direct selling to employers. We've had a lot of success selling to everything from sole proprietors to franchises that have a couple thousand employees. We're also working directly with benefit brokers as well as HRIS platforms, so the ADPs and the Paychexes of the world. And we're actually currently rolling out a pilot with our first enterprise customer, which is one of the largest staffing agencies in the US. So we're actually going to be trying to cover over 30,000 temporary workers on their behalf. And the final thing is their state mandates. So a lot of states are going to be requiring you to actually offer one of these plans. So in the beautiful state of California, where many of us live, if you have more than 5 employees, as of this upcoming June, you're going to be required to offer some sort of a defined contribution plan. You can go with the state-sponsored plan, you can do a 401k, or you can go with Icon, which is a really easy way for you to get up and running and compliant within a matter of days at a significantly lower cost. So with that said, I'm just going to show a super quick product overview so y'all can see what it looks like. And hopefully I can actually get it going quick here. Here we go.
To your employees. Our innovative platform helps you set up your plan in minutes. To get started, you'll set up an account with basic information about your company. Once we've verified this information, we'll work with you to finalize your plan. Icon links to your payroll and banking partners, and we sync contributions with your payroll cycle. So all you have to do is approve the contributions. Through your dashboard, you can easily see contributions, employee participation, and other plan details. With Icon, there's no annual plan testing or federal filing requirements. To enroll your employees, you'll upload their information, and Icon's automated enrollment process will do the rest. We'll ask your employees a few questions about their investing preferences and objectives, and based on their answers, we'll suggest a portfolio that's tailored to their needs. Icon also uses personalized contribution defaults to help employees decide how much to save. Icon is the easiest, most affordable way for you to offer a retirement savings plan to your employees. Get started with Icon.
So with that said,
wow.
That's Icon.
Look at this. 94% of people believe.
We just need to, perfect. So everyone who wants to connect with Icon gets the chance now to submit yes, and otherwise they will also be participating in pretty much every one of our breakouts. So you get the chance to really connect with them and learn more about it. I think I definitely want to find out more for my personal retirement. Perfect. So I think we're gonna move over to the next startup, and that's Upside. So I think that's Kamran who will be presenting. Oh, perfect. You want to take over the screen? Thank you. We can't hear you yet, so just making sure that this is correct.
Thank you, everybody. Kamran Hamid from Upside. Be relatively quick. At a high level, everybody really knows about the student debt crisis in the US at $1.7 trillion. But when you look at it from an individual's perspective, it's really become a second rent for a lot of kids. So what that really means is because they're spending the first 10 to 15 years of their life, a significant amount of their cash flow just on student debt, what's happening is marriage is getting pushed off, having kids are getting pushed off, buying a home gets pushed off. If you keep on going, retirement kind of falls off the map. So when we step back and looked at the problem, we realized it was actually two problems. Not only are kids dealing with a student debt crisis today, but there's actually a retirement crisis coming for them tomorrow. So at Upside, the value proposition is relatively simple. We want to put thousands of dollars back in your pocket today through better interest rates and the ability to lower your payments by up to 25 to 50%. At the same time, build a solid foundation, put millions of dollars back in your pocket for the future. But the key to all of it is to actually have no change in behavior whatsoever. Each payment you make contributes to your long-term savings as well as to your student loan. So to use an example to sort of explain this a little bit more easily, Eli has about $75,000 of loans, paying about $1,000 a month right now. we can lower his payment from $1,000 to $750. So he's getting $250 back every single month to do whatever it is that he wants to do with it. Now, within that $753, we put $244 automatically into a brokerage account, and about $500 of that goes towards servicing the loan. By the time he's ready to retire, he has about $1.5 million or $2 million in his account. Now, how do we do this? There's a couple pieces to it. First, we take every student loan, we stretch the term from 10 years to 30 years. And that gives us the ability to actually start lowering their payments if they're required, or put the money into assets. And the second part of it is, when you're doing student loans, you're actually bringing together a marketplace of consumers and Wall Street banks or debt capital. And so they give us the money that we can actually buy the loans, because every customer is about $75,000 or $100,000. So what's happening is, now as a customer, you're paying the loan every single month. The balance is going down. The money is going into a brokerage account, is growing at a compounded rate. And it actually has two purposes. The first purpose is to build wealth for the consumer. And the second purpose is to actually build collateral for the loan. So what this mechanism is, we call a self-collateralizing debt. The debt actually creates its own collateral over time. So by the time you get to about year 8 or so, the loan is 100% secured. So there's more assets than there are liabilities. Now, Wall Street banks or debt capital, who we work with on the other side, love this, because they still get the risk of a 10-year loan, but now they get the income of a 30-year loan. And consumers love this because basically on autopilot, they're building a retirement with the same payment they're already making with their student loans, or even making a smaller payment while getting a lower interest rate. So at a high level, basically we're creating a portable digital pension that sits in between Social Security and wealth management, where we want to make sure that people who have student loans and are not able to create wealth can actually build a solid foundation for their future. And the only question they have after working with Upside is, what kind of lifestyle do they want to have by still contributing to their 401k or IRA? So that's it for me. Thank you very much. Looking forward to talking to people in the breakout.
Thank you so much, Kamran. And we will taking over the screen, and you'll get the chance to, again, start the poll. So perfect for Upside here. You can connect with Kamran directly. We'll make sure to introduce you to him. And then once this is ready, we're gonna go over to status money. I think we got quite some responses back. So thank you very much for everyone participating. And then over to status money. Thank you.
Hey, everybody. Thank you, Desiree and Plug and Play, for having us. Well, today I'm going to tell you a little bit more about Status Money. I'm Majd Maqsad. I'm one of the co-founders and the CEO. And really kind of the story of Status Money starts with me and my co-founder having spent our careers in the credit cards business, particularly at Citi and at Discover before that. And we had multiple kind of access points to data, and the things that really kind of helped educate us financially about what was going on in the world more broadly and what was going on with people's personal finances. It turns out nobody has access to that data. And there's something called the money taboo that prevents most of us from talking about money with each other. So as we talk about financial literacy and we think about financial literacy, one of the things that's holding most of us back is our inability to actually communicate about money with each other. Not being able to see what people like us are thinking or doing or investing in inhibits our ability to make smarter and well-informed decisions ourselves. And that insight kind of led to the creation of Status, which is a social financial management platform that provides everything from budgeting tools with peer-to-peer benchmarking, as well as a social network for members to communicate with each other and share financial knowledge and insights. I'll run a brief demo for you guys and tell you about the various features of it, as well as kind of where the platform is going. What I'm going to do here is, if you can see my screen, this is our website, statusmoney.com. I'm logging into a demo account. And kind of what's important to see here is the platform really looks kind of and operates like a personal financial management or a budgeting app, largely. So users link their various bank accounts to it and can see their various transactions and their balances over time. On their dashboard, they can get highlights and insights about their various accounts. Those are all generated using machine learning and are personalized to the individual and in real time. They can track their spending, as well as all their various financial metrics, and importantly, see how they're doing compared to a group called their peers, as well as the national average. Their peers are a group of individuals that are kind of matched to the profile of every individual user. In this case, they are people who are 30 to 39, who make 65 to 70K a year, who live in Minneapolis and who own a home. And that matches the profile of this particular demo user that we're looking at. So you could track your kind of spending in comparison to those people and see that you're actually spending more than your peers significantly, and significantly more than the national average. So that, without having to get into a lot of jargon, educates an individual consumer and motivates them to take action on what is obviously an overspending situation, right? Their top categories can be kind of filtered, and you can look at the trends of their spending in various categories, also with this kind of peer-to-peer comparison. And there's a bunch of other metrics, which in the interest of time, we won't get into. The second kind of major aspect of a platform is the advice feed, where users can actually communicate with each other. And here's where we kind of shatter the money taboo and enable users to communicate with each other while still preserving their privacy. They do so with nicknames. So as you can see, people have nicknames. Morsi here, for example, who it seems to be asking about their retirement account with Fidelity and what a good rate of return might be. And this particular post generated 41 comments from the community, each kind of sharing their own experiences and their own data. Yeah, not something you would particularly have with maybe a friend or even your family, but in this forum, it's completely okay. In fact, expected.
Thank you, Mesh. Unfortunately, we're already up in time, but everyone who wants to connect further with Mesh, I think that's a nice way to continue the conversation. And we will just ask everyone to quickly say yes to further connecting with you. And then we'll move over to the next startup, the last one, before we just move over to the breakout session where you get the chance to further connect with Mesh and everyone else. Thank you so much. Perfect. And then we got Embodied Labs for the last startup pitch. We got a few minutes left. Thomas, are you taking it away?
I am. The startup lightning rounds. Let me go ahead and pull it up. All right. One moment. There we go. Hey everyone, I'm Tom, co-founder of Embodied Labs and head of sales. It's nice to see your faces or black boxes with your names. I know you're there. It's nice to see you all. We're Embodied Labs. We are, started in a healthcare place of healthcare training and education using really storytelling and immersive tech to tell the experiences of older adults living with certain health and life conditions. So, I think coming from a health place really and having, a customer base in the financial industry, and also, having some exciting conversations just before this this meeting, we really do see that health conditions lead to wealth decisions. So for financial advisors, the average client age is 62 years old, but the median age of the financial advisors is about 40 years old. And so, taking that in, there is quite a difference between the people who are experiencing these health conditions and life conditions that impact the needs, products and services that they need as part of their wealth journey. But there's also, a huge percentage, 70% of the wealth managed in the US owned by older adults. So older adults are the most likely to experience a health change that determines what services they need. And ultimately, because of the age gap between the advisors, And because of, we've talked about this earlier for separate topics, but there is a taboo around people's cognitive changes, around people's health changes. And ultimately, conversations around those happen too little, they happen too late, and they take way too long. So, as far as, where we see the pain points for financial advisors and financial, wealth management companies is you reduce revenue opportunities by, lacking opportunity for upselling or really tailoring needs. You can have a customer leave because they haven't gotten the need that they've gotten elsewhere. And of course, increasing your costs to serve those customers. So the ways that we've partnered to use Embodied Labs, and I will give a demo in a moment, it'll be a very brief demo, to empower advisors with a common health language around what they've experienced. So training advisors to be able to understand what their clients may be navigating from a health perspective, engaging clients with a relevant experience, and of course, using Embodied Labs as a sales and marketing tool with families and with clients to be able to talk about what they might be going through and recommending additional services. So we have a wide range of experiences about Alzheimer's disease, Parkinson's and Lewy body dementia, end of life conversation and social isolation. Really all of these things that impact an older adult and their financial needs, whether they're alone or with their family. The ways that we work, of course, a subscription to our platform. We work with organizations to co-create experiences around training or marketing. And of course, we do have a program called Learning Journeys, which walk users and professionals through a 6-week journey around certain topics like dementia, social isolation, vision and hearing loss, really certifying those professionals on certain topics. So I'll pull up the demo and you can let me know when we're out of time.
Yeah, we got like 30 seconds left, so maybe really quick, but I think that's more like Gina let me know that it's probably better if we continue during the breakout, because you're in the advisor enablement, and I think that's a smaller group, so you get the chance to like demo it there. So for anyone who wants to learn more about advisor enablement and how Embodied Labs does that, like Alex here is the trigger for you. Give Thomas some 30 seconds to present it then, please. Great. And whilst we still continue to poll, we can maybe already go to the next slide. So as you see, we kind of hit the really like the part where we talk about the content. We talked a little bit about the problem around financial literacy, and then we heard some interesting, intriguing solutions. And now it's about making all the connections and like making this a very exclusive experience for you. And for that reason, we put you into breakouts, so you don't need to do anything. You can quickly see yourself, like connect yourself with the moderators for each group. When you signed up for it, you also decided for the topic of interest to you, and so we will automatically be assigning you to the respective group. Goal of this whole session will be like really making sure to familiarize yourself with the other people that participated in this workshop, also to get connected with the startups a little more and with ReMark in case you have any questions, how to use the platform. They will happily run you through it. It's also your chance to connect and ask the questions that are like most pressing to you and get best practices from every other person. And remember, every insight is valuable, so there are no stupid questions, so to say. Feel free to address them. This is a safe and safe environment, so we appreciate you participating, and we appreciate you turning on your camera now as well as we move you to the breakout rooms. And I'll see you there. Okay, wonderful. I think we just got kicked out all of our groups, but at least I had seen a wonderful conversation taking place in my room. I hope everyone else did the same. And I see a lot of people have turned on their camera, so thank you so much for all that. So before we close in like the next few minutes, I'm going to give you a little bit more of like an outlook what you can expect. But first, I want to hear about every group, like a little bit what they shared. So I'm just going to go one after the other, just a highlight from each group. I'm going to start with room number 1. I think Allison, that's you, if you just want to say 1 or 2 sentences.
Yeah, so I think what we talked about in the financial planning group was that overall, some companies are starting to already have it as their offering, some are looking to offer it. But I think some of the consideration, and we've heard this when we focus on health and wellness, a lot of these other emerging topics, is that how do you define success and what is the return on investment for it? And do consumers actually want it? So it's trying to kind of figure all that out, and how does that fit into the overall offering of the company?
Perfect. And then I think we did have a second financial planning group. So I'm just going to quickly hand it over to this other one. And Dan, I think that was you participating there, right?
Yes. So, the majority of our conversation was about how trust is really dwindled within the industry between consumers and providers. And so, there's two routes that you can go. And one is maximizing the trust by going through trusted groups like employers. And that's where you can really have more of a connection through that medium. But the way that, the world is changing and innovating, people aren't investing the same way that their parents are. People aren't working the same way that their parents were. There's a gig economy, there's part-time work, there's consulting work, there's all these different types of lifestyles and investment strategies that people are following. So there's a growing amount of people in that segment that need to be catered to. And it's going to take some major change within the industry from planners to help to adapt to that innovation, have more well-rounded strategies, and be able to connect with younger generations before they're at the stage where they need to invest, so that they don't feel like they're being sold to. They don't feel like it's a reactive type of sale. And it's going to be interesting to see how different providers are going to cater to that group as it continues to grow in the market.
I think that's a nice point which leads us over to the next group, where we talked a little bit about new product development. And I think we had two groups there too. So Marissa, do you want to share a little bit what your group has been sharing?
Sure. A big piece of what we discussed was creating that desire or that need for education, and starting with like pain points that younger consumers had. Their focus on student debt, and how can you leverage that need to introduce other products and services that will help them in the long run. We also talked a bit about influencers and the role that employers can have on educating consumers. Those were the main topics.
Thank you, Marissa. And then we had the second product development group. We also talked about the educational gap. So I'm going to hand it over to Jackie or Steve, or both of you, if you want to say a few words. Jackie, I see you unmuted.
Sure. We were similar. We focused on the education debt, but it was in relation to the what we heard on the literacy and the debts. We talked a lot about how today they're seeing really high inflation on education. They're coming out of school with high debt, but on the other side of it, we talked about the need for education, but the need to educate that they need education. So we talked a little bit about their overconfidence. We did hit on the fact that they are willing to share more these days about personal debt and personal finances, but there's still, you have to be pretty mindful in how you approach them, because there is a need for education, but there's a need to get back by the barrier that, as someone put it very eloquently, that they all think they're financial wizards. Steve, anything you want to add?
Just the other end of the spectrum, so to speak, is the boomer segment and those that are just behind, if you will, and how to focus on education for life changes as we all move through them. And I think the opportunity for solutions that are bringing bite-sized education activities to the fore and enabling access to products that make sense for these different generational stages that we go through.
Thank you. And then Kevin, you're last, and you were in the advisor enablement group. So let us know what Alex stimulated the conversation around.
So one of the main takeaways for our group was that we're able to
enable our agents through digital, whether it's social platforms, crowdsourcing, insights, blogs, online meetings, and using that to keep our relevancy within the middle age groups that say they're very good at financial literacy and trying to educate them more on that.
Thank you, Kevin. Perfect. So I'm just going to share 2 last slides and ask you all to like stay on for 30 more seconds. So the first important reminder is thank you all for participating today and making the time to really join us for the full 90-minute session. It was absolutely wonderful to have so many people sign up for it in this new year. And we really hope to see you for the next one, next consumer behavior driven workshop around elder tech on April 13th. So we'll be sending you more details in the following weeks and add you to the calendar hold for this, but we hope to see you. And then lastly, to making this even more like successful, please like send us your feedback if you have any. We will be following up with the recording of today as well as with like any additional like details like startup decks or videos. And also if you want to further connect with anyone else, we will be following up in the smaller groups. But if there is anyone else you saw on the line in the Zoom and that you really want to connect with, just reach out. You got our email addresses. Yeah, thank you very much. And thanks especially to the ReMark team for making such a great presentation as always. And for all the startups participating today, we really appreciated it.